What is going on, traders? So, gonna do a little review of the E-mini and the NQ. Try to move fairly quickly today. Hope you guys are having a good weekend. As a lot of you know, by this point, you know that I thoroughly prepare for the E-mini trading for the upcoming week, and I do it on weekends. So when I get a moment or two on a Saturday or a Sunday, I'll typically chart all my levels and get ready for the upcoming week. So I'm going to do that. I've had my espresso. I'm on the treadmill. I'm walking, a little bit of oxygen, a little bit of exercise, feeling good, did some stuff around the house. So now it is time to perhaps go find some support and resistance levels that we can overlay onto our lower time frame charts for the upcoming week. And that's going to help us intraday as day traders because preparation is key. And when you have put levels that overlay onto your charts from higher time frames, you will typically find that intraday, when those levels are painted onto your charts already from your weekend analysis, you'll find that you feel a lot more comfortable exiting, or entering I should say, maybe exiting as well, entering trades on those levels when the market maybe slows down or tries to make a reversal or push through, right? Whatever it may be, right? Whether you're looking for continuation through those levels, if you have the higher time frame analysis on your charts, a lot of times it gives you confidence to execute on smaller time frames. So anyway, without further ado here, I'm going to get into it, and I'm going to start looking at my daily TPO chart. And so this here is the regular trading hours only, and I typically focus on just the RTH when I'm using my daily TPOs, and I'm looking for various levels. So a lot of this is already done, right? If you look higher, you see all these levels above us. These are already finished from prior months and weeks analysis, right? But we've continued to move down in the past few weeks, and so we now need to look back above and look at how the market has moved down through these zones and what market activity is left over, and how might we trade these levels if the market moves back up into these zones. Hey Charles, hey Gusa, hey On Point. Getting used to being live daily now. Yeah, we'll see. I mean, we'll see how it goes. I go through spurts, but you know, I'm having a good time doing it right now, and I'll do it until I'm maybe burned out or I need a break. But I will be traveling next week, so not all week, but thinking about when am I going to be gone? Maybe Wednesday, Thursday, Friday, something like that. Maybe into Monday. So we'll see. We'll see how that goes. Definitely won't be doing any live streaming on Friday. Definitely not. We'll see on Thursday. All right. Well, it depends on when we leave Thursday, or is it Wednesday? I don't even know. I've got to check my calendar. But anyway, back to the TPOs here on this right side. So first things first, let's get the views that we want here. We got singles here, right above. Singles here. Singles here. That's from 518. So I know right away that I want to mark singles for this. 518. let's do that. And then we have some volume and more selling from 518 as well. Let's see what we can do here for this. $518 lower singles. We have singles here from Friday. I know that this is going to be very relevant up here. And this is, what day is this here? 5/17. We'll call it high with the, like that. So what I'm looking at here are these 50 and 100% levels and seeing how they align with the volume nodes, if any. I'm also looking at volume nodes and LVN areas and looking at how from prior days, so you see how there's volume here, and then a distributive top, and then we sell through in our TH through this. So this tells me that players in this area are not defending at all. As we sell through this with volume, yeah, there are a few players here that are buying, but the vast majority are not. And once they're pushing through, they're continuing to expand below volume. And they're expanding it quite aggressively. And as they expanded lower, then they were covering some here. But still, on consecutive days, they were able to push it lower and lower. So it's interesting just to see, based on these distributions of volume, that sellers are totally in control just by the movement back through the zones. So very interesting. All right. So when I say 520 NVPOC, that's the date, and then naked volume pointed control is what that refers to. So I'm putting it on this chart, and this chart with this number 36, it's going to be referenced by a bunch of lower time frame charts, including footprint, volume, 30-minute chart, 5-minute candlestick chart. And so all those notes are going to get overlaid onto those low time frame charts. And you can actually see that what we're doing here will actually, let's see, it overlays onto this daily chart here that we're going to look at in a second. Right? So this, the TPO chart that we're looking at right now, is overlaying to the daily as well. Okay, so let's get rid of that other one. All right. And I like to look at things, squish them up a little bit, look a little further back in time, and just see where we're going, how we're moving. Take several different views of the market. It's really important for me to see how we've moved against even volume nodes, like say here, this one here, in the regular trading hours. Right? It's my main focus, because you can overcomplicate things by having to look at all the extended trading hours, Globex, and then you can get overwhelmed. So I keep it RTH only for this type of weekly overview. And these TPOs, they are time shaded. So in other words, the lighter, or you could say the brighter parts of the TPO occurred later in that session. Does that make sense? So if we drag this out, make it a little bit wider, here, like that. See how it's brighter blue here and bright white? Well, that occurred later in the session. As we know from Friday, the rally occurred later in the day. So here, there was a sell-off later in the day, and then we closed down here on the orange arrow. And then here, early morning, right, we sold all day and then closed down here, right? Here, you can tell early morning accumulation, and then we sold here up at the highs, right? You can see that movement just based on the time shading. So it's kind of cool. You could always split this apart, by the way, right? Put the letters blocks in their own column, and you'll see the exact same thing, right? Early morning accumulation, late afternoon rally, right? Same with this. You could see the same exact thing, right? Late after, but you can tell just looking at the way that this profile is built where the activity started. Early morning, right? Early morning, all early morning, late afternoon, and then selling off. So let's see if we're right. Yeah, see that? Late afternoon sell off. Bink. It's not incredibly hard to figure out how price moved. So anyway, that's why we do the time shading on these. Let's put these all back here. Looking here at the volume, 1.9 million contracts traded in this RTH. 1.75, 1.75, 1.3 million here. 1.3, 1.45. So definitely almost 2 million contracts traded here. And if we look at the volume, there's a lot of it was traded down here. The volume weighted average price on Friday was, it's a little hard to read, 39, it looks like 39.66, which would put us right about here. So that's VWAP for the whole RTH session. So that's something to think about. Somewhere in here. Yeah. All right. Let's take a look. Notice we couldn't come above here, so this is also naked. Volume point of control, naked TPOC. So, oh. All right. Let's do this. What day was that? 5/6? So it's a naked VPOC to naked TPOC zone from 5/6. So if we scream up here, we'll be knowing what we're entering in terms of a daily TPO chart. We'll be knowing what we're entering, where price is going from the higher time frames, right? So we only look at the more important things, not every single volume node in here. And we try to figure out what is the most relevant, right? So we think about a little bit, if we had aggressive selling through here, where there's very little volume and there's singles, so aggressive selling. If price was to come into this area, when you first probe an area, what ends up happening, right? People are uncertain as to whether price can bridge the whole gap, right? So what do you typically get in an LVN area? You get sellers coming in who are maybe long from a volume node below going, well, I don't know what's going to happen here, so I'm going to sell some, right? So you get minor reversals in the market typically. But what happens if we get over, we pull back a little bit off these, so let's see these lower singles, which is low volume node from, I don't know, Wednesday. What happens if we pull back, then we keep going up? Well, we'll probably end up moving through this fairly quickly. And when I say fairly quickly, I mean a day or two. Maybe even same session. And then you have the upper node. And then you got to look left and think about if there were buyers left over from this day that maybe tried a little bit here, maybe added. Are they still trapped from this day? And you say, well, they probably washed out. Well, don't assume, and this is probably a golden rule of trading, don't assume that people are going to not hold positions underwater and get out at break even. This is human nature, human behavior. So, if we come back up, let's say we get the little pullback, we come back up, we start moving throughout the day. Let's say we turn it, it's a trend day. On the day it potentially comes back through this zone, right? This is just a hypothesis, potential scenario. Why do we do this? We do this because we want to have an idea of what price typically does through these areas based on preceding structure, market structure. So if we come back up, what might be resistance? Heavy resistance based on trap traders. Okay, so let's go back to the structure we were talking about. Volume, volume. They tried a little bit, sold, a lot got out. But there's going to be remnants here. So if there are remnants in through this area from these longs, you may ask yourself, are they going to try to push it back up? Is it now the turn of the shorts to feel pain? Potentially because of all the volume that transacted down here, right? With our VWAP being what, 38.66 from that day? Possibly. But for scalps, this is now the first volume ledge and upper singles. Okay, so what I like to do is just point it out. I like to point out that this is going to be a volume node now, and it aligns with prior week's volume, right? So this is the lowest part of the upper intraday volume area. So we'll just put a little note there because it's important because of preceding price action. Right? This one's important because it was a breakdown from here. There's going to be plenty of volume nodes all over the place, right? Here. Notice this one becomes resistance here. So we come back up. You think that they're not going to find stops above? Yeah, they'll probably find stops above because what? This volume already rotated out these folks here. Whew, big sell. So you come all the way back up. It's the turn of shorts to feel the pain. At least how I think about it. So here, this is it's a volume node, and so going with what I just described, it is a, what is it, 518 HVN break down, let's see, how do we want to describe it? We'll just say trap longs. Now, it may not be trap longs. We may get some catalyst in the market, Monday, Tuesday, whatever, and we scream through there. But again, we're just trying to figure out potential scenarios and probabilities. And you say, Mike, this all sounds like BS. Well, preparation is what causes me to have my most success for the whole week on Sunday, Monday, Tuesday. Because I'm then really, really ready based on this kind of analysis for what may transpire around zones. Now, you should figure this out for yourself. Don't just put levels on. Don't be following along going, all right, I'm going to put the same notes on my chart. You're like, no. The point of me sharing this is so that you guys can learn to think about for yourselves, maybe your own way, how to consider the story of trap traders. I kind of come back to that a lot, but it really can help you to figure out support and resistance in sort of a story format, right? Follow the story of trap traders rather than just blind TA. Technical analysis is all about trend, statistics, moving, it's all about trap traders. It's all about what traders are doing repeatedly. And we're using, pattern recognition and things like that to go like, hey, there's a statistical probability of this possibly repeating, or if we go above this level, then these players are wrong, or these are right. So, I just try to incorporate the story of trap traders to further elaborate on TA. So, Andre, you are the man. Thank you very much. I appreciate that. What a guy, Andre. Really, you don't have to, but if you are too kind, my friend. Harlem Trade says, do you always prep on set? I'm just looking to chat here because I've been looking left or right, and the YouTube is on the left. Do I always prep on Saturday? I'll prep on Sundays or Saturdays or even sometimes Friday nights. It just depends how much time I have, right? I've got a family, so this morning was all about hanging out with the fam, cleaning up the house a little, talking with my wife. I already held my little girl during her nap time, rocked her, played with my son a little bit. I did Gorilla Glue on put some Gorilla Glue on his little headlight on one of his cars. He busted it, broke it apart. Daddy, this is broken. How did that happen? I don't know. He likes to pick at things, so anyway, Gorilla Glue, it's... Now I'm like, I still got to do some shopping, but it's a good time. I feel good. I need to do a little exercise. Not a lot, but I need to do a little exercise. So anyway, that's the goal here is to just get this out of the way. And then maybe I can think about it a little bit more over the weekend. I prefer to do it early in the weekend so I can kind of think about the markets, do a little bit of synthesizing over the weekend. I'm not consciously trying to think about markets all weekend. You got to break away and take a little moment to yourself, do the things that really matter. But I read this book. What was it called? It's by Barbara Oakley. Something about, and I can't remember the name of the book. I'm looking for it on my bookshelf. But it's like how to, here we go. I'll jump off my treadmill, hopefully not fall as I get back on because it's jamming. Okay, boom, back on. It says, A Mind for Numbers, How to Excel at Math and Science, Even if you Flunked Algebra. So the book is all about how to learn, essentially do well in school, and I bought this book many years ago, and I find that it helps me for trading because it teaches how we learn best, right? And so there are some tips in here, and one of them is, right, give your brain a problem and then relax and let it find the solution, whether it be sleep or a nap or going and taking a walk or whatever. And so the earlier I can get my prep done for the next week, the more my brain has time to sit there and process it all. So I do prefer to do it early, but you know, life is complicated, especially when you have a family. So it is what it is. Okay, so let's go back here. And if I talk too much about all this stuff, I'll never finish in the amount of time that I really want to finish. I'd love to get through NQ today. All right, so here's 50%. Okay, 100%. Boy, we had nice range extension. What was that on Friday? 100, 200%. Right? You get often, honestly, when you get 200% extension from initial balance, it's usually an I know we mean reverted like crazy, but it's typically when you get that kind of outlier move, you generate enough breakaway momentum to continue, and then it will often turn into sort of a liquidation breakaway event. So it's interesting if we go look at essentially what was Wednesday, right? We had this big, that's an outlier day, right? Huge move to the downside, then we consolidated, and then we tried for another huge move to the downside Friday. I think Friday is partly mitigated because of Wednesday's outlier, humongous downside day, right? So it's, I don't know. I might be talking out of my arse on that one, but I don't know. It's more rare. I'm just saying, I'm pointing out that it's more rare to get this 50, 100, 150, 200%. Typically at like 200 plus percent, it doesn't mean revert so much. So I don't know. I think it was Andre actually that was pointing out some option flow on Friday that maybe the folks were a bit off sides. So, you know, as usual, the markets are more complicated than just mean reversion, right? Oh, it hit. Here. Top 49. Where is it? Nope. Upper 49. So many screens. The market is more complicated than, oh, I hit the bottom of my Bollinger Band down here, and it's bouncing, right? Oh, see, Andre's talking. He says, going back to yesterday when, with the footprint, have given a clue of an upcoming. So, Andre, you know what? The clue, I don't think that the footprint gave us the clue. The clue was more in the channel break of the 5-minute candlesticks, right? In that big reversal bar that broke the trend and then held on the pullback. And I did a fair amount of talking. Here, let's look at it. Right here. I did a fair amount of talking about that in the stream the other day, which is you had. So I know you say on the footprint, where and when was it? But this bar here, to me, was the big bar, right? Here, it was this one here, right? And it's a clear break of essentially what was a pretty clear trend down. Okay, Now, if we go look at the footprint, what did that look like? And that's a valid question, right? So, hey, look at today. You get to see the trade window. I was maybe going to show at the end of this video some order configurations and stuff like that, and how you can configure Sierra chart to really nicely execute from a chart if you don't like executing from a dedicated DOM like I do. But anyway, so let's go back and let's look at it here. First, let's scrunch this all up so we could see. Now, okay, see how easy that is when you overlay the chart drawings? You could see what you're trying to highlight. All right, so let's look. So first off, let's ask some questions, right? What's the cumulative delta at this point, right? It's down at the bottom. It's negative 20,000. What's the delta in this bar? 2100 delta, positive delta. Now, when you have 2100 positive delta, what's the length of the move from the low of candle to the top of candle, right? And now let's go look at these other deltas. Right, this is 1,000. This is 1,200. Now, what's interesting about this? 1,200 positive deltas doesn't get very far, doesn't break a trend line, right? But this one, 2,000, 2,100 positive delta, it's almost double the length of the bodies of these here. I guess there's nothing too crazy about that, except it breaks the trend line. So let's just keep it simple stupid, right? The keep it simple stupid is you broke trend, you tested it, the breakout zone, and I talked about this on Friday. And then we talked about inverted head and shoulders stuff, right? And we said, roughly if you hold this area and then start back up towards the neckline, we probably are going to get a reversal, right? And then we talked about, oh, well, here's how we considered the channel for the reversal. And then about here, I said, well, this is likely to be a reversal zone because of consolidation. And it's likely to come up here and maybe fail at 50%, then go take out the lower the trend line, right? And then somewhere in here I said, I changed my mind, right? Looks like there's hardly any sellers up through here, and we could easily rip higher, right? I'm not trying to make myself look right. I'm just saying, like, well, you know, you can be wrong. You know, you try to predict the future, and then MGI, market generating information, comes in, and you're like, well, I got to switch what I'm doing, right? So anyway, looking at the footprint here, to answer your question, you had big volume down in this area, right? You had, let's zoom in a little more. Let's try not to overthink it too much, because I think I think it's very easy to look at this in hindsight, knowing this is what happened, and go, this is the tip-off, because I already know what this has happened. But if you're on the hard right edge of the chart, okay, and price is screaming in, and it's still in a downtrend here, do you have any clue right here? All right. You see this is an iceberg seller, right? So this is someone who, after a big trend day down, is now aggressively selling these lows. Aggressively, they're doing it passively because it's an iceberg, but that's a lot of contracts to sell here. And then underneath, it's all just a bunch of negative delta here, right? All the way down to the bottom. It's a fair amount of contracts here, right? So these are the lows, or close to, right? Where where did the market really get going? All right, it came down, hardly any volume through here. Notice, right? Big positive delta, so an aggressive passive seller. Aggressive in that it's high contract values. Passive in that they did it through ICE. Came up, hardly any volume, and then what? Explode. Some aggressive sellers up here, probably longs from here in this candle. So they sold it down, right? You see the negative delta. And then from here, look, very low contract values in the hundreds. And then from here, another aggressive profit takers, and then very low contract value. See that? 93 contracts even here. And then it just ripped. And if you saw it in real time, you saw it going straight up through here, right? And so now this is a big candle that's what? Super bullish engulfing. Like, it's not just bullish engulfing to here and then closing on highs. We're talking about just engulfing all of this with a lot of movement, fair amount of volume. And at this point, the trend line break gets defended. The 10 SMA is curling up. We're now riding above that. And then, you know, here we got value area low. So anyway, to answer your question, on the footprint, the tip-off was here, right? It's the passive seller that gets destroyed, essentially. Shorting after, you know, over 100 points to the downside. And who knows, maybe that's somebody having to hedge off a big position down here. They have to. They're like, okay, we're not, you know, we've got to be delta neutral. Not in terms of these deltas, but like positional delta. Like maybe it's a hedge fund. And they're like, you know what? If it comes back up, we got to sell this because any lower, and, you know, we're going to be hurting, right? So any bounce, they're selling, right? Just to get more delta neutral. And maybe a bunch of people get offsides because of that, right? They see a large player doing something in the market, and now they're thinking, yeah, I'm going to go with this passive seller here. I'm going to go with them. And that's a bunch of weak money, and then boom, you break the trend line, and it's all she wrote. So hopefully that kind of answers your question a little bit. All right, back to the higher time frame stuff. Yes, daily. All right, let's go back. Let's go back up here, right? 27-inch full screen. Okay. Let's see. All right, I think I've had enough of this daily chart. Let's flip it to the weekly chart. Expand this guy. So this is now a weekly chart. Now notice on the weekly, right, we had these naked volume points of control here from way back in the past. That's what these extended orange thick lines are. They're not settlement, they're just naked volume points of control. And then the thick white ones are naked time points of control. Notice we have naked volume point of control way up here, almost at 4,800 still, right? We've got some up here. Right? These aren't always necessarily filled in short order, so you got to keep that in mind when you're looking at these things. These aren't short-term targets at all. And if you're going to view it that way, you're going to get wrecked, right? It's kind of like, and I think we missed this here. Let's see. Yeah, this is a poor low down here. That's another thing, Dennis, is that, or Andre, sorry, is that there's a lot of players who are looking at this going, we need extension, right? And so I talk about this pretty often, which is that you got a lot of market profilers who, when they see like a little poor low by a tick or two, depends on your settings, right? So some people it has to be a perfect poor low. For others, it's like depends on volatility. So a low within 4 ticks on consecutive or separate 30-minute time frames. So within 4 ticks on ATR, say 10 or something, which is 10 ATR on like a 5-minute. So 4 ticks would still be a poor low because volatility and whatnot. So this is just a few, right? This is essentially 1 point because this is aggregating 2 ticks, right? And then the setting is 2 ticks for the poor low, and so this is within a point. So I consider it a poor low. And I think a lot of traders who use market profile are considering it a poor low. So what I've noticed is, now we're going back to day trade time frame, even though we're looking at higher time frame here, which is daily TP, is that a lot of market profilers get trapped trying to short or get long against poor highs or poor lows. So it's just something to carry forward in your narrative or understanding of what's happening intraday, right? So it may just have been a whole bunch of weak players entering the market and large players going, wow, we've been buying all day, right? If you guys noticed on my 1,000 volume chart with essentially market depth historical graph or heat map, there was liquidity absorbed all the way from about here all day long, just bing 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 all the way down. And I pointed that out in the live stream, that was interesting to me, that this was liquidity provided and not just pulled but absorbed all day long. So kind of telling for the move up in the afternoon. And it kind of just shows you sometimes that there are players on higher time frames that are just happy to keep buying lower, and they have lots of money to spend. So it is interesting. I don't know that it really helped me with any day trade positions. Looking at that liquidity get hit for 60 or 70 points. But it is something that I was thinking about as I added it, right? And you're like, well, what are you talking about? This is what I'm talking about here, that I was pointing out in my live stream on, let's see. Let's see. Right here. You see this liquidity get absorbed? Bing, 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 all day. All day. Bing, 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 added. Absorbed, re-added. You see that? This was hit. They re-added as soon as it went higher. They filled on the way down. Filled. All right, market bounced before. Filled, filled, filled. They were just willing to add. They never removed this liquidity. You see this? It was there all the way to the close. This is a player just going, we're buying. No matter what, we are buying. Look. See? This is high liquidity here. So this was something that I was noting and posting and talking about during the live streams. This interesting liquidity was here, just filling all day long. So sometimes in these declines, larger players are just scaling in. And it's just interesting that through all this, right, we ended up coming back above it, kind of back to the same level here. And then there was massive liquidity, and I was talking about it like, we're going to go get it, we're going to go get it. We got it, but didn't make the move straight to the upside, 39. I don't know, somebody was calling 39.10s. I thought we might get it. So I went long in here a bunch of times on MES and Didn't quite work out. Anyway, so I digress a little bit. Let's go back to the weekly again. But this is interesting to note, is that we have this poor low. So I'm going to go ahead and put that on the chart as a poor low from 520. 520, poor low. And I'm going to say, because of the viciousness of the... Oh, it's not there. That's okay. It'll show up right now. It'll show up on this volume chart, but I'm adding it to the TPO. 520, poor low. Trapped shorts, we're going to call it. Should show up here on this volume chart here. Bink. Did it show up? Yes, right here. See that? That line just showed up here. So we're saying 520, poor low, trap shorts, just based on this move. So anyway, let's get rid of this. This is now a dirty marking on our chart. So is this. This is a dirty marking on our chart. This is now a dirty marking on our chart. I want it nice and clean for Sunday. All right, let's go back. You know, I have like 8 different sources for OBS, so it gets a little tricky clicking through all these things in OBS. So many different sources for this. Anyway, all right, so back here, let's get this a little bit smaller. Let's go back to this, widen it out here. All right. Time to take a look at this weekly chart. We have all these levels above, and kind of think about it a little bit. Hey Matthias, I don't have the Discord anymore. It's gone. That's why I keep mentioning in all my videos the Discord that no longer exists. All right. Just gonna think about this a little bit. Rotations, heavy volume, distribution, back into time here. Early in the week, tried to go higher. Ran into volume from prior week, rotated back down, poor low, back up. This is now multiple weeks low volume. Now markets do tend to fill in low volume. And low time, they tend to hang out. So this is now low volume here. They filled in some, but based on last week, that's low volume. This is now low volume. This is low volume. It's also low time. Low time, so we would expect some sort of profit taking from longs, some sort of distribution next week potentially. If anything, even spending time in this area before rotating back up or down. Just something to think about on from a higher time frame. So I'm gonna mark that. I want that in my narrative for next week. Why? Because I want to be aware of what potentially may happen as we're moving through an area. So this is low volume, and this is all low volume. This was higher volume, but we ripped back through it to the downside this week. Now we came back up. So we may be coming back up this week. I think I was mentioning we're coming down. I think I was looking at this, but maybe coming back up to test this area. This is all fairly low volume, but still I say because of the Friday rally, the way we turned and burned, a little bit of short covering, and it wouldn't surprise me to come back in here, test this, and then go test this area at some point. So it's interesting to think about. For me, it is, right? Low volume all the way to here, a little higher volume. So this is a low volume multiple weeks in a row. Alright, so this is about the zone. This is higher time, low time, low time. So this zone width might be a little wide. Right? So I'm just being careful as I think about it and how I'm putting it on my chart. I'm being a little, and you might think, oh, he's nitpicking. These little, instead of just jumping and saying, okay, I'm done, thinking about it, from asking these little questions to yourself and then adjusting the width may actually pay a lot of dividends next week. Even if you can't play directly off the level, just the fact that you have a thought process about, hey, wait a second, more time was spent here, and then there's a little less time here, less time here. Maybe this zone, if it's a little smaller, maybe it will actually fill in with volume, then make a reversal. And if you have that on your chart and it's marked the right way, it could really, really help you next week to think about why price is moving the way it is in this area and so much volume is filling in here. So multiple weeks, low volume. And remember, when you have high volume below, high volume above, what you end up getting in the middle is a little bit of balance, right? Longs and shorts. Battling it out or taking profit or, right? Taking a position towards one node or the other. And that's why you get high volume in an area. It's not always one group of people or one big player going, ha, I'm trapping you. I know exactly where the market is going, right? Tinfoil hat on. Right? They control the market and they know exactly what they're going to do. People are wrong. The JP Morgans of the world might get it wrong. The Stanley Druckenmillers of the world, he's making money shorting SPY puts. It's going to come a time he's going to be wrong because no single player is bigger than the market. So, anyway. Let's modify this text. And multi-week low time node, low volume node. How about that? There you go. That's enough for me to remember. Multi-week, low time node, low volume node. Okay. Cool. All right. Big distribution. Still a poor low. We know that's marked up on the daily as a poor low. So this is a weekly HVN, right? It's the nearest HVN above us. So we're going to mark that as well. All right. And this is the week of 5/15. Well, it's red, so I know that it's a weekly. 5/15, it's a weekly line, so I don't even have to write weekly, but if you want to, you can. So anyway, 5/15 HVN. We could even do weekly, but again, it's a red line, so I know it comes from my weekly chart. We'll put it there anyway, right, so you guys are less confused. See, my weekly TPO charts are red. My daily ones are blue, right? Look at the difference in colors, right? weekly red lines. I don't have to put weekly on there. I did it mainly for all of you guys. Previous videos. So there you go. All right. This is now from 5-1 week. This is a high volume node here. Weekly value area low. I'm most concerned from this week, not with the highest volume node, but if you have a fairly wide volume node, I'm now concerned with where volume really drops off for the week as potential resistance, and if there's any other structure from prior weeks. So here's a low from the week before this, and then we have a volume node right there, right? And then this week we came in and tested this here. So if we come all the way back up here, where does volume really pick up? About here. So if we come back up, is everyone going to get bullish above this level? Probably. So they'll get bullish, and then there'll be volume here. And I might be looking to fade the crowd if sentiment gets overly bullish. Depends what kind of people are bullish, right? Smart people are bullish or dumb people. So that's, follow the right people on Twitter and monitor them for years. Learn their personalities so that you can interpret their sentiment properly. Know if they're smart or dumb. Right? That's why I don't follow very many people on Twitter. Because I don't really want to get the whole sentiment from people that, for example, think about this. Right? Some of you are new traders. So maybe you're dumb traders right now, but in a year or two, maybe you're going to be smart traders, right? Maybe a month or two or 6 months, depending on how hard you study. You're going to be a smart trader, right? Now, if I follow 200 people like you, can I keep track of all your progress as individuals to help monitor sentiment? Because I think sentiment can be important. No, I'll never be able to track your progress. But if I monitor people on Twitter that I know are experienced investors or traders, and so they don't shift their sentiment week to week, month to month, year to year based on the latest, greatest thing, or I know that they're fairly independent, then I can actually use how they post to recognize if they're nervous about markets, right, or not. And so I can accurately track their sentiment. But again, if I follow too many people, I'm going to lose track of all of that. Hence why I only track a few people. So there's an argument to be made for less is more, because it allows you to put a greater level of analysis on the few that you do follow, right? And a more accurate analysis, especially from the sentiment side. I get it with technicals. Maybe you do something on TweetDeck where you put all your technical traders in and you don't care about sentiment from those people. But for sentiment, right, you definitely want to have a baseline for everybody and have an idea that, hey, you know what? It looks like this guy just had an epiphany and he's no longer a perma bear, right? He shifted from how he's been tweeting over the last 3 years from mainly bearish to I just looked at a 100-year chart or 120-year chart of the S&Ps and the Dows, and we've been in a bull market, and I don't know what I've been thinking for the past 20 years. I keep shorting markets, and I'm right every once in a while, but gosh, on balance, I lose a lot of money shorting too early or thinking that the world is going to collapse and that the Federal Reserve is a Ponzi scheme, and it may be all of those things, but man, I've been wrong in this 100-year bull market for too long. I'm now changing. I want to know that if I follow that person on Twitter. I want to know that they've shifted as an investor, as an individual, so I can go, yeah, you've just had some right midlife crisis, and I don't think I want to follow you anymore because you've changed, right? Because I need some baseline to take the pulse of the people that I follow. So it's important. And I know you guys are like, this is technical trading. Well, I'm sorry to tell you, but you'll be better off if you can get the pulse of the broad investment community and fade the fools. So a lot of people do it wrong or it's overwhelming. That's okay. If you can't do it, then don't focus on it. If you can still make money just doing technicals, then do it. But you'll make more money if you can incorporate sentiment a little bit into your trading. And that's one of those things that takes a little bit of experience, right? Alright, back up. Let's see. Matthias, I don't really do the one-on-one sessions. I don't have time, man. My family is just too important. So I do the YouTubes and everything, and hopefully help a fair number of people. And then that's about it. I got rid of the Discord because I don't have time. So that's why the Discord doesn't exist, is because I'm trying to collapse time in my life, be a little more efficient. That's right, Andre. You and I, sir, are watching the same thing. Hello, Dave. Anyway. Max Crass, hi. I don't know if you're even still around, but I see you way up there, Alex Lee. Anyway, appraiser guy. I hope you're all getting enough exercising in. If you had a bad few days last week, hope you just forget about it and move forward. Happens to all of us. Anyway, so here we go. I've talked a lot without putting a whole lot on my charts at this point. That's okay. Alright, so this is high volumes, this is a high volume edge. This is what we were talking about, is that area here. So let's just use the Stream Deck to do what we need to do. So this is a high volume edge, stops into this area, I think. Going back to what I was saying before, that'd be my thesis. Stops, let's see. Look for stops. There you go. Nice and long, because there is a little bit of a story there and I need to remember it. Okay? So that's how I'm going to remember it. I may abbreviate it come Tuesday or Wednesday if we're there. Or remove it altogether if the move occurs and we get a pullback there. And again, I'm going to be looking at footprint short term. I'm going to be looking at candlestick structure short term. But I'm going to have that overlaid on all those things. And it's going to be useful for me, because it always is. Alright, so here we go. On the weekly, singles way up here at 42.78. I like it. We're going to just call this aggressive sellers started here. That's it. You guys want to know what my thought was in this area, why I had this weekly 0.5 to 618 fib zone? Is that I figured that all the retail plebs were buying this and that it would be resistance the next week. Guess what? Couldn't even get back to it. And then so that's why it's still there. If we get back there, all the pleblitos that bought here are going to want to get out, break even in this golden fib zone. right here. It's the fib from here to here, right? And you notice this is 50. Here's 618. Notice no volume through here. All retail bought this. And we come back the next week, reject at it, take a lot of them out, come right back to the edge, the bottom of the 618, big rejection. All the retail people rotating out of their stocks. So now we've come in, filled in some of this high volume stuff. It's getting interesting, but you know, I do consider the 61% bulls from Helene's poll that Andre pointed out. I voted down 100 points. Anyway, maybe not reflective of what I actually think, but like, could it go up 100 points? Yeah, it could. Could it go down 100 points? We're in trend. I'll go with that. I don't know. I'm not particularly convicted either way, to be honest. And the fact that I'm not particularly convicted, can I use myself for sentiment? That I'm starting to feel less and less confident about things? Nod your head. Yes, you can. Use yourself. Use yourself to figure out if the natural movement of the market is eroding your confidence, right? But you have to know yourself as well. Okay, so excuse me. We've got the weekly. It's about as much as I'm going to do on the weekly, to be honest. That's it. I'm going to look a little lower. Nope, that's it. We can go into other charts for this. So that's what we'll do. We'll do left 27 inch. And let's see. All right, now I get a look at the chat over here. SOS, what's going on? All right. Ooh, asset managers keep selling. Look. See that? COVID lows. Look. So here's asset managers, the biggest group of longs in the market, right? So pre-COVID. So they're now below pre-COVID levels as far as the commitments of traders net longs go on the E-mini. Kind of interesting, huh? Really, really interesting. Higher time frame stuff. We have this fib retracement. Excuse me. We're at about 38.2%. We're just bounced right above it here. Into this area, we have this extremely low volume node here, which we talked about in prior weeks, that if we move through it, we're going to move fast probably, and then go fill it in. So here we are with it's still a low volume node. So the filling in of volume all the way up above 4,000 would not surprise me here, which would then what? Test the lows here. Now we already tested the lows one time. We come back up, and we test them again, probably go get stops. High volume node, then come back in. Just thinking about natural movement based on what we see on low time frames. All right. So this green was based off of a prior video, balance area from here. So it's essentially you double balance, where balance is here. We'll say here to here, and then double it to here. See that? That's what that is. So that's why it's there. It does get overlaid into the low time frame stuff. So when we get there, we're going to know it's a weekly HVN, high volume node, and it's 100% of 4126 balance area. So this area here, right? Down at these lows, so extension down here. So will that help us? That's the question. Will that help us when we're trading into that area to think, maybe if we're selling off like crazy, right? It's not a great area to take a swing short position, meaning multiple days swinging short the market, because it's poor location on a swing time frame. So that's important to consider, right? Anyway, 50% retracement right here, 200 SMA for the weekly time frame. This is a weekly chart. We still have this upper trend line, 1, 2. We now have big retracement, complex retracement, about 20, almost 20%, 18, 19% closing on a closing basis off the highs, right? Let's see if we can. Yeah, I think Matthias, Andre is right on the money, because, you know, a lot of these old videos where it's simply like, I think the videos are labeled something like, oh, live trading MNQ MES or whatever, and then I tell you how much profit I made in the description. Those whole things, I'm talking about all kinds of intraday footprint stuff, market stuff. Like, a lot of them are full courses, but I'm not labeling them correctly on YouTube. So you're going to be like, well, what's in that? So Andre's telling you he's probably been in some of those, and so he knows. And then, you know, when you watch those videos, I was doing it in real time. So none of that is after the fact BS. It was all, anything I called was happening with no delay. And so you know that what I'm saying, either it works or it doesn't. And I'll tell you that most of it works most of the time. So, or at least it'll educate you at the very least on how to maybe consider various scenarios using footprint. So anyway, yeah, I would, Andre's on the money. I'd go give it a listen. Give it a listen. If I Oh, I got you, Matthias. I'm sure there's somebody over there at Axia that's willing to do one-on-one and charge you for it. They have a whole crew there, don't they? That does education and will charge you or whatever. Yeah, I don't have any. I'm not in that business at all. Yeah. Anyway, so anyway, on the weekly, we've got this interesting complex retracement where we have this move and this move like that, right? So, oh, that sucks. Oh well, there's got to be somebody out there that's good. I just a hold of, yeah. I know what you mean, Matthias. It's tough, but so we have a complex retracement going, and then if we come back up to this trend line, we will absolutely have a rule of 3. 1, 2, 3. So this is interesting even of itself. If we go lower, I'm sorry, but I'll be backing up the bus. I just will, especially if sentiment gets really bad through here. I'm going to back up the bus on the retirement account and close my eyes and not look at it again for 5 years. It's just how it's going to be. You're like, what? I've played this game long enough, right? Prior support. Anything could happen. That, if we go 80, 90%, because of inflation and everything else, even if I'm buying at 50, 60%, I'm just going to hold and hold. I'm going to do the Warren Buffett thing. It's just what it's going to be on the retirement accounts. They don't pass your smell test, Andre? I don't know. I have nothing to say negatively about Axia. They put out lots of free content, and I'm sure they. I've had a fair number of traders tell me that they sell a good course, and so I do trust some of those guys. And so if they say that, then thumbs up from me. But I've never taken any of them, so obviously I can't speak to it directly. But no negativity from moi. Alright. Such a small group. I'm so glad people are out enjoying themselves. I'm going to be gone here pretty soon as well. But anyway, weekly, as we grind lower, asset managers, levered funds buying a bit here. Levered funds buying here. I get it. We're in a different environment. A lot of people are saying, the Fed is raising interest rates, but remember, the market prices stuff in, and we are in a 100-year bull market. So that's where I stand on a lot of this, is that I'm constantly looking for the long opportunity. I've been a perma bear before and gotten roasted many years ago because you see what's happening in the market. You go, this is unsustainable. The Fed money is bad money, blah, 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 blah. So I've been on that side of the market. And the long haul bears don't make money. They do in short spurts when the markets go straight down like this. But over the long haul, they typically lose. So even if you go measured move off of head and shoulders kind of trend line, it measures to about down here into this double balance area. So 200 SMA down here, max pain into this area here. Max pain might be somewhere down in here into this 50% to 618 area would be super max pain. That would be who was it the other day? Was it who was it? Somebody up in the chat from before. Man, I swear. G-Trader, Lord of Skies, said 3,400. He's only 400 points away. I think he said that on yesterday, right? It's only 400 points away. Another 10%. I get ya. I got you, buddy. Could happen. Risk happens fast. We actually have a bunch of really bad structure from election back in here, which I've been thinking about since we busted out of this zone here. So it's kind of interesting that I know everyone's like, oh man, you're talking about bull markets and all this, but something to consider. A lot of bad gaps and structure on the weekly back in here. I don't know. It would be a nice opportunity to shake everybody out all the way back down through here. I mean, you lose the 200 SMA on the weekly chart. It's just like this. When you start losing the 200 SMA on the weekly, I don't know if you guys are aware of Theo Trade, Don Kaufman. He's a perma bear. He just is. And he's a self-admitted perma bear. He was losing his mind through here. He was giddy and telling everybody at 2,300, bear market rallies can be vicious, but there's good reason. There's good reason, guys, to sell this market. This market is in disarray. Everything is falling apart. The plummet of the market. And he got, the dude is good, supposedly, at managing risk with options. That's what he says. Okay, he taught on a corporate. He taught corporate investors risk management. So, maybe he didn't get wrecked, but if you were following him through here under this 200, you got wrecked if you didn't know how to manage risk. So anyway, below the 200, my point is below the you get max pain and you get max sentiment. So I would be interested if we get back into this area here, and just back up the bus. I'm already getting long here, guys. Retirement account has just been buying from all the way here in these lows. I bought a few times, I sold a few times, I stopped out some bigger position stuff for losses. Net I'm up, but barely. And now as we go lower, the retirement account is feeling the pain. But I'm not in I am in some cash, so I'm waiting. I'm gonna buy more. It's just how you gotta do it. Long term, it's how you gotta do it. And you gotta be willing. Now if you're 70 years old, you gotta maybe think about something else, but I'm not. So I have the long-term perspective about markets coming back into balance up here. So anyway, a good follow on Twitter for a lot of this stuff is Seth Goldman. He's good. And then also Hugh Karlowitz. What is his name? Oh, I can't remember his full name, but that's his Twitter handle. Hugh Karlowitz. Carl's with the K. Really, really good. Okay, so we've got this. Let's now go to the daily chart here. I'm running out of steam already. Let's go to the daily chart. Disciplined, I mainly buy index funds. So I'll buy QQQ and SPY. It's very, very rare for me that I buy IWM or diamonds. Very rare. I'm mainly buying SPY and the Qs. And I'll buy a little bit of individual stocks, but typically this is just my trading style. Individual stocks I buy for most of it is 1 to about 2 week swing trades, right? So if I buy on a level and it bounces like 8 or 9% in a few days, I'm out. If I buy, it doesn't take my stop out, and then it grinds up slowly and starts to trend and make higher lows, and it's not real volatile. So with the last example, we use Tesla, right? Where Tesla is super volatile. If I have done some technical analysis, I'm like, I got this level, and it's within $4 or $5, and I get a fill there, and I have a stop. Maybe it's, 1 or 2%, but structural stop. So, if a structural level underneath it breaks, and it's good risk reward, and Tesla makes an 8 or 9% bounce in a few days, I'm out. Okay. If I get 2 R's on the trade, 3 R's, I'm out. It doesn't matter if it's a day or two, I'm out. So something volatile like Tesla would be that example. But then there's other things, where you buy Pepsi or you buy one of these other stocks and they just move slower. So in those cases, I'll hold those for weeks because they just take longer to hit the goals, the risk-reward goals. So I do trade some individual names, but typically not on the same time frame that I'll trade, say, SPY or something like that. So I have three time frames that I trade: retirement, long term; swing trade, anywhere from 1 day to 2 weeks typically; and then day trade. All right, so I'll play options for the swing trade on Qs and SPY, also buy shares, and then I'll buy individual stock names. But then for the long-term accounts, typically I'm just buying SPY mainly and some QQQ, and I think, it's, there's an opportunity or something there. So long-term retirement account, not really buying options, just shares, holding, buying, holding, mainly index funds. So that works for me, because day trading futures can be a very, very, very full-time job to do it right. That's smart, disciplined. Why not? So part of the reason is that I've been buying shares of QQQ and SPY on the way down is because when I make money off of my swing trades, when I think there's an opportunity, the market's coming down on the retirement account, I'll take those profits and buy shares of the index funds. And it's just like, it's with profits, and I'm rolling it into a retirement account, and I don't have to overthink it so much. Buy and hold. Just buy and hold. Do the Buffett thing. So that's kind of why it's very low stress for me when it comes to buying shares. Anyway, daily chart. Let's take a look. This is one of my favorite charts to look at. Lot of fun. Lots of fun to look at daily charts, for me anyway. Hey, Marcin. Oh, triple QQQ. I don't ever buy any I've day traded triple QQs or triple Qs, or triple QQQ, but I've never held a swing trade on TQQQ ever. So that's interesting. I don't know how it holds up over the long haul. How much, if at all, if it loses any value because of that high leverage. I'm sure it does, just like all of these. Yeah, Matthias, maybe, man. I don't know. That's what makes trading fun, is we all don't really know. My mother-in-law came over, I don't know, maybe a few weeks ago now, and she said, yeah, she saw me come out of the office. Oh, I've been trading. Of course, she took the opportunity to talk about the market, and she said, I'm just want to let you know it's going to go way down before it goes way up. So you could sell now. And one of the things that I like to tell people that tell me that kind of thing is, I was like, well, if you're so certain, why don't you max all your credit cards out, sell your cars, go open up a day trading account, and put everything on near-term dated options. Do you know when this is going to happen? Well, in the next month or two. Okay, there you go. Okay, go put it all on puts. I'll tell you the expiration date to buy, and risk it all since you know the future. And they shut up really fast. They're like, well, okay, so then don't tell me you know what's going to happen. That's the great thing about trading. We don't know. Everyone has an opinion. And that's all it is. If you, I mean, and I get it, right? That's what we're doing here. We're talking opinions, and I'm not actually trying to say anything negative about you, Matthias. I'm not actually, because then I have to say something negative about everybody that has an opinion. But it's just what makes it fun. Is that we don't know. You just don't know. I do know this. One of the greatest investors of all times, Warren Buffett, has been having a buffet buying stocks. So, I don't know. And the dude's 90 something years old, so he's buying not for himself, he's buying for the people that are going to be around in his fund in the next 10 or 20 years. So, Buffett buys, the news cycle goes, oh, Buffett's underwater by a few $1 billion on his positions. And typically what happens is a year or 2 or 3 years later, they go, damn, he was a genius. Damn it, Buffett was just, he was buying when everybody else was talking about selling. I'm going to do that next time. So, my thing is if the market's declining 25%, just about every investor, long-term investor, market wizard will tell you, as a rule of thumb, the market declines 25-50%, buy and hold and forget about it, right? So, anyway, I'm not a financial advisor. This is not financial advice, but people smarter than all of us can give general advice like that. I don't know. I bet on more upside. 100-year bull market. That's me, but yeah, cool, Matthias. That's cool. Yes, Andre. Anyway, all right. So daily charts. We're down here. We got poor lows. What's interesting is where we bounced. Look left, my friends. All right. Here. Let's do this without much bias. There you go. Look at that. Kind of interesting, huh? See that? This flag that was tested. Now let's go put something on the lows here. Where does it come down to? Right there. What? Comes right out perfectly almost. Look at that. See that? Right there. Breakout zone from this little flagging area, the pullback test, and then rip. So shorts are what? Still covering from back here? Yes, they are, guys. Longer term shorts are still getting rippy here. They're getting a little crazy. You're like, really? They held through all this? Yep. Higher time frame. There's all kind of market participants out there. Some have 10-year time horizons. Some have 1. Some have 3. Some have 5-year. Right? All kind of time frames. So, really, really interesting spot here. I wish I would have had this marked up from the weekend. For whatever reason, I didn't. But this is not a hindsight one here at all. This is you could have put a line right in here and been very aware that this was at a very important level. Very important. But I apparently missed it. So I did not do enough analyzing last weekend. I was busy, so is what it is. This weekend I'll be prepared. Alright, so we got this. We've bounced there. We've got levels above. Alright, let's look at the short-term structure. Alright, here we already resisted. We came through. Down, up, resistance, resistance. Short term. This here, resistance, Is it extreme low volume here into 3960? Yeah, it is. Resistance, so the big bear bar here, resistance. See how it lines up though with, now this is where it gets interesting, right? Because we're overlaying our TPO stuff onto these daily bars. And so for some of you it's easier to do it this way. Oh shoot, I'm not on the chart that I should be on. Dang it, sorry about that. Man, I have been talking about this daily chart for a little while. Did nobody tell me about it? Let's see. Oh, Joshua. Thank you. Thank you for that, Joshua. And if it's somebody else that pointed it out, I need to look at the chat a little bit more. Anyway, oh boy, I already deleted stuff, moved on. Okay, well, let's show it again. Show it again. Important, right? Look. All right. This pullback here being spring, test, go. Okay, so this is what we were looking at, right? So if you did this as potential support right here, and then this as potential support right here, would it have been useful for our, so you see this here? Would it have been useful for Friday's action? I was trying to point out, absolutely would have been useful. See that right there? This was the test after this breakout, straight up. So I'm saying shorts were still trapped here. That's what I was talking about on higher time frames, and making the argument. So you see how the low was right here, poor low, right? You see that right there, bing. So anyway, now looking at this low, we've already come up, right? We did this, came in here, bounced a little bit, went below, made a big bounce, came back through, down, back up, tested the low, rejected, tested this, big bounce, and I was pointing out how we overlay the weekly TPO and daily TPOs levels that we've already done onto these charts. And notice now on these daily candles, this is what this is, a daily chart. Man, I'm so disappointed with myself here. On this daily, these daily candles right in here, how this lines up with the bodies here. You see that? The close, the open, the rippage on the downside. And now these are what? Trapped longs. So you see how it is interesting if you just look at the candlestick structure, how a lot of these things will all line up, right? And then here we say there's this wick. So think about a short-term 5-minute candlestick chart, right? Where you get a body and you get a wick. And I don't know, let's say you get a wick like this, right? And then like the price has moved down, okay? And what ends up happening, right? And then we move sideways a little bit. And then all of a sudden, okay, so this is the close right here. This is the open, right? So this is, number one is the open. This horizontal line is the close. Everyone's what? Sell pressure, red candle. But what ends up happening? Immediately, the smart shorts, oftentimes, they cover. And then you get, on your footprint, you get orange for the volume per second at the beginning. They cover, right? Because there's all these people selling this candle. All the short-term price action day trader people are all selling this candle because they've got a signal for whatever reason. This is a red bar and it closed on lows and it closed below the low of, I don't know, this candle, and this candle was a neutral candle, and this one's closing on the lows, and this one couldn't quite break the open of this candle, and so you get a short-term signal. And then the smart players who have, let's say, a footprint volume node here or something, they're like right away they sell into everybody who's got their signal after the close of this bar. Right? But remember, we have a wick that goes all the way to here. What ends up happening? Get that? You get the original, you get the smart players closing right away. They don't wait. They don't wait around. They just close. And then you get crazy high volume per second. Maybe it runs some of the stops from people who shorted here looking for more downside, who aren't looking at the right time frame for whatever reason. They've got their tick charts going, and they're all, whoa, they get screwed on the open of the new 5-minute bar or something like that. So they close, and then slowly they start selling it and selling it and selling it and selling it. And in the market, they let it take it down, and then whoosh, right, goes, takes out the lows. But what ends up happening on these pin bar type bars almost all the time after a big move? Remember the scenarios if you have a big move to the downside. So they go out, and all of a sudden takes out stops, big volume here, but you don't see it because you don't have footprints, right? Big volume, but in the footprint it's like massive. They absorb the crap out of it from this volume node to here. So they absorb the crap out of it, but all the candlestick people they're not paying attention, right? They don't look at the footprint, so they don't know what's really happening in this little pin bar. It comes right back up. But in this area, there's trap traders on the footprint. And over 5 minutes, this thing builds a little more volume, a little more volume, a little more volume. And then before you know it, there's like this volume ledge. Like 30 seconds before the 5-minute bar closes, it goes, and then it goes right to the top, and then 10 seconds before it goes, bing! And you don't have footprint candles on, so you don't, or footprint bars, so you don't know that there's huge absorption up here, and icebergs here, and all the retail people are piling out, and they're, all the price action people are going, what the hell? This was a freaking amazing pin bar, and I took this signal, and it goes on the other side of this candle, and then there's ice there, but the non-footprint people, they don't see the ice, they have no idea what's going on, and then all the footprint people are looking at the ice going, hey, stop at the ice, or enter at the ice, stop, 2 ticks above, oh, my risk reward is like 10 to 1 because I'm risking 2 ticks, and I'm gonna get right back in and go, this player here is gonna be right. And then they rip up 6 or 7 ticks in volatility, no volume, just found stops. And then all the longs who get the signal, oh, pin bar broken, they go long, and then they slowly sell into it, hitting every single bid, and then they crush the spirits of the longs. Meanwhile, you're in a downtrend, and this is just a bear flag zone. And this activity has occurred like this. And you're going, what the hell is going on? Why the heck can't I buy higher highs against trap traders at the lows and get a reversal? And it's only been 7 minutes. Right? And you're left going, man, day trading sucks. I ain't doing that. I'm going to buy and hold. YOLO. I'm going to buy this area. I'm going to YOLO this bad boy. 3 contracts, E-mini, $10,000 account. And then the market goes here. And it hangs out, and they build a volume node. And you capitulate because what? 3 contracts times 7 points, 21 points. Oh, I'm down 12% on my account. Right? This is the game that's played every single day. Okay. So now let's extrapolate and apply it to what's going on here, right here. Little pin bar. Hey, is this bullish or bearish? Well, I'm gonna put my stop above here, right? Stops for the other side below here. Now we're coming back close. They're finding stops on this movement. And this is going to get dirty here if we go above here. So what's your entry? Where are the trap traders located? There's some up here. And depending on how we get into this area, this is our mean reversion daily trend line. depending on how we come into this area, if I see trapped traders getting out and they're absorbing, I'll probably look for the reversal back into range. And then this, if I'm wrong, which I could very well be wrong, if we come back up here, guess what? I'm looking for trap traders before this zone. Hence why we have all this in here. So it's very useful to look at the daily structure, then think about how the market moves intraday against people on short time frame candles, and how they constantly just get whiplashed by all these price action signal bars in volatility, and to think, all right, where's the path of greatest pain short term so that we can bend over all these people that are wrong, trying to trade tiny little movements. And that's why I do it well, right? Is because I don't think like the majority thinks. I think kind of the opposite in a way. I think, where's max pain? And then I can get in on a position to have very little MAE, very little drawdown, right? Tight stop. And then I know what it should look like when it gets there. If it doesn't look like what a reversal does when it gets to that point where the stops have been hit, I can get out around break even usually, right? So it's interesting to consider the daily structure like you would an intraday time frame. So kind of some good stuff around here to good stuff to analyze and get your tinfoil hat on and have a good time thinking about how the market may move through these zones. Follow the story of trap traders and who gets hurt over which highs and what it typically looks like on the low time frame, right? So anyway, all right, let's zoom out a little bit. By the way, so this is an RSI, the orange, and then these other sort of teal and, I guess, whitish kind of lines, like right here, or red, light red, pink. It's a stochastic, slow and fast. Just look at the Stokes over here. All right, it's a momentum thing, right? Downside just kind of pins and we go down. Upside, you get these here. Upside, you get these moves, and then whoosh, here, bounce. When we start trending hard, just look back here. You start trending hard to the upside, look what happens. All right? These things can stay elevated for a while before the market pulls back. Same with downside. They can stay elevated for a while. But what's interesting, just kind of looking at it a little bit, is that, right, you look at this. We're just going to look at Stokes here for a little bit. All right, here, here, here. This one might be interesting. All right, now let's bring it up. So I'm not going to be biased by looking at the highs. We just look at the Stokes and how they look at certain areas, and then to see if the market does anything interesting. That way we're not biasing in real time and comparing and then trying to find the ones that work and the ones that don't, right? We can just kind of look at the Stoke and then go look at, or the stochastics, and then go look at the actual structure. That's why I do it like that, right? So here we go. Like, right? We'll see this here about lines up to here, right? See how it just stays pinned and it trends all the way to about here? Look at that, right? And then when it trends back the other way, it's a shallow pullback and rip. Okay, so that's interesting, right? Now we can think about it from the opposite perspective. Okay, now this one we said was interesting. Now look. All right, so it's here. What can we learn about this? Okay, new highs. This we rejected from new highs off COVID low. New highs, big sell, right? Profit taking. I get it. I think that one makes a lot of sense. All right, this one panned out. Look, right here. I mean, not panned out, maxed out for a little bit. Look. And then the Stoke pulls back. Whoosh, shallow pullback, rip way higher, right? My point is to point out these Stokes can stay pinned to one side for a long period of time. They're not necessarily great at showing reversals. They are good at showing momentum. All right, so this one was interesting in that what? We sold off and it stayed pinned, what, from here to here? So it stayed pinned from here. Oh, it's beautiful. Look at that. To here, right? But if you had gotten long here, right, you would be long right, what, right here? The first touch, you were good, right? It pinned to the bottom. You, like, made some money. Now, you kept staying long. You're like, I'm going to buy the pullback. I'm going to use this Stoke indicator. Wreckety wrecked. It's kind of interesting, isn't it? Okay, so this one. Here to... Here, I'm just looking at how it aligns with the lower. Look, there. See that? Pinned. Went up a lot further. Right? I mean, these things, we still get the reversals, but went up a lot further. Okay, here. Right? Let's look. This is what backtesting looks like, guys. Actually not biasing yourself with your indicators. Right? You need to learn how to use your indicators so that you can recognize they can give you false signals like crazy. And then ask yourself, well, when do they work? First touch of maxed out indicator. Let's see. First touch. Let's see. Here. Yeah, first touch. First touch. Bing! All right. First touch. Bing! Right? You're like, this little, yeah, well, that's a big bounce intraday, okay? Right here. First, oops. Trying to get it right. First touch. All right, let's zoom out. Maybe that was a bad one. There's the Stoke maxing about here. Shortly after, bing. Okay. First touch. Bing. You know, you guys hear me talk about being the first person to move on a level that everybody else is too afraid to buy, and they're all waiting for confirmation. This is why I'm a first touch kind of guy on levels. It's demonstrated by Stokes here very well. The first touch of a level, if you know how to read it, support, right? Resistance here becomes support. Stoke bottomed out. Great bounce. But after a while, you might just be buying, if it goes down again, the second, third time, all the dunces have finally figured it out, going back to Marty Schwartz. 3-day rule, right? First day, smart players are selling. Second day, the semi-smart. By the third day, all the dunces have finally figured it out. Goes back to rule of 3, right? Principles of patterns. When you see a pattern, right? First time, it's not a pattern. Second time, not really a pattern. Third, it's a pattern. You'll even hear this from, and they're right, from classical chartists and technical analysts, right? So 3 points makes a trend line. 2, you can find those everywhere. And they're right. And they're right. Because you can find 2 points everywhere on a chart. 2 points, right? 1, 2, it's not a third point. 1, 2, right? But when you get 3 points, 3 points are harder to find, and thus statistically more relevant. All right? 1, 2, maybe 3. But that also means everybody else sees it as well. So anyway, first touch. If you have other areas, things of confluence, you should be taking the bet with defined risk. That's how I play. But a lot of people are like, that's just stepping in front of falling knives. I get it. For a lot of people it is, but it's not for me. So I play successfully that way over and over and over and over again. But it's not what's taught. I get it. Trend guys say, wait for trend. And boy, there's a lot to it. You know, people make money. The Larry Tintorellis of the world for, you know, trend following. They make lots of money. Can Slim, lots of money. Mark Minervini, lots of money. 100% per year, kind of, you know, trading investment portfolio return. I get it, but for somebody like me, I'm looking for shorter, higher probability plays. I love this style because it's not taught so commonly. So reading the do you guys see? I mean, it should be fine, no? Yeah, it should be fine. Anyway, is the screen? I mean, you should be able to see the mouse moving. No? Can you not, guys, not see? Oh yeah, you can see the mouse. It's okay now. Okay. Well, you know, I go on these rants, Andre, and then I come back, and I don't know how long it's been since I've been ranting. 10 minutes? 5 minutes? I don't know. Just talking. So anyway, let's take a look here. What can we see? Oh yeah. All right. So we got this low here. That'll be interesting. Low volume, if we get it. All right. Let's put it up. Where does it go? Yep. All right. So this emanates from 3/5/2021 low. All right. Let's just put it on there. 3/5/2021 swing low. All right. That's good enough. That's into the high volume node there. 3617. All right. This one a little further. 2/1/2021 low, swing low. 2/1/2021 swing low. Well, we're getting in here. We're looking at volume profiles. We're looking at market structure. And if you looked at the TPOs, you would see a lot of this is going to make sense on the TPOs as well. Now, that's a major swing low with major movement. This is just a point, a blip. Even though it's fairly even, right? This low is fairly even in terms of distance apart. It is a nice pin bar. Oh, it is interesting. You know what? I'm curious to see how the market moves when it comes to this zone, if it becomes relevant. So 12/21/2020. We'll put it up there. Why not? 12/21/2020. Pin bar low. All right, we'll call that like that. No major swings here off a big retracement. Here, yes, here's a swing high. So we've got this movement here, which is balance, right? Which is that big balance breakout that we had. Boy, I remember this like it was yesterday. I was so chicken to buy this there. I did not. When price went up like that and then pull back, I said, I thought it was over. False breakout, and we are coming downtown. We're coming back into this range. I actually thought here we're going to come back in, and we're going to spit it all the way back down, get rid of all these stupid bulls. That's what I thought. So, boy, was I ever wrong. I could never regain my confidence to go long and stay long throughout the day on all this choppity chop. I could not stay long for the life of me through here. I could not. Every time it pulled back, I thought it was death. I thought it was going to be death this whole time on the way up here. Boy, I remember that like it was yesterday. Anyway. So will that be an interesting spot? Yeah, that will. Because that's that balance breakout zone. You know, if I was a long-term player, I would have been loading up the short bus here after this pin bar. I would have been, it's maybe a wrong analogy. Not the short bus, but I was the short bus here in terms of my TA. I was on the short bus for sure. And if you don't know what the short bus is, that's the bus that carry like special needs kids. So I was definitely, I was not a good performer here, right? Is what I was saying. I'm not trying to be mean. I'm just saying I was, maybe not the best way to describe myself here. Maybe I'm not. Maybe I'm insulting them, not myself, because special needs kids are awesome. So, all right. Can I retract all that whole last few minutes? Trying to be, I apologize for that. Okay, so definitely on the wrong side here. So I think this whole area is going to be very important. So we're going to mark that as a zone. Let's just move on from me I'm digging, the shovel is out and I'm digging a deeper hole. Jeez. Okay, so let's put the shovel away. All right, so this is the breakout zone from balance here. From 2020, so September all the way to November election. All right. And this is all that poor structure in the market that I was talking about, right? Biden's getting elected, right? I still remember it like it was yesterday. Biden's going to get elected. Steven Spencer of SMB was saying nonstop, we're gonna rip, and I was like, I don't know, my man, but the way he said it, and I was following Steven Spencer of SMB at the time, I was like, this dude knows. So I was really afraid to step in front short because of balance, but I could not get long for the life of me. So lots of poor structure through here, but you think we're going to bounce? Now, if it's poor structure, it means it was aggressive buying, right? Which means that shorts got aggressively roasted. Right? Yeah, right. They did. They got aggressively roasted. Oh. Okay, so let's see. So anyway, this is the balance area from September 2020 all the way to election. Okay, so let's do it. Let's put that in there. So balance BO, not body odor, breakout from 920 to 11. I don't know, we'll call 1120. Shorts trap. This one deserves a nice long, because it might be a while before we get here. Who knows? Maybe we bounce, keep just drilling down. And by the time we get all the way down, or we may be a few days and we're there. Who knows? But I need to remember, if it's a month from now and we're down here, I need to remember that that's what I was doing. this is what I was thinking about. Because who knows? Maybe a month from now, I'm busy with something else, and I can't do my weekend analysis the way I want to. All right. We've got a lot of levels here, and this is just fine and dandy. We've got ES daily. Let's go to the 30-minute candles. Like, geez, man, you got a lot of lines. Yeah, I do. I do have a lot of lines. Now, this was from a prior week. We can get rid of this one. That's why we clean it up. Daily trend line, median trend line, right? Do you remember I was talking about that? Right? You push lower than that median trend line, tends to go test it, and then in strong trends, continue from the median or the middle of that channel, right? And that's where it is. Here we go, tested, right back down. All right. You remember why I was confident shorting on Friday? Breakout area here, right? Breakout of what? Big bear flag on the 30-minute. Where, oh where, are all the longs trapped? Some here at the breakout. They're also trapped up here on this 30-minute consolidation. Now this is an RTH only. That's why you see all the gaps. And the reason I make it RTH only is so that we see gaps, right? You see this? Open. I'm sorry, this is the close. So this is a gap, big gap here. So from here, this is a gap that has not filled. Here's another one. A gap from here all the way down. All right? So these are interesting to look at. And I need to go fill these in. And look how we say trap longs, look for stops. See how it fills the gap? You see that? See how this all starts to come together? It's really beautiful. All right, so now you're going to get a whole bunch of overlapping stuff. That's a VPOC, naked TPOC zone from the prior week. And it happens to be the gap. So what do you think is going to happen if we come back to the zone? You think there's going to be long remnants there? Sure. Are shorts going to want to cover into that zone because they're in profit? Yeah, absolutely. They'll drive it right back there. What do smart players do? They step in front after the shorts are all eviscerated, right? And there's no natural buying left. And smart money goes, okay, well, these shorts are all covered out. Not a whole lot of natural covering in the market. All right, we'll play against all of the trapped long remnants that are now hoping to get bailed out ahead. Hence, BBWC, base breakout with consolidation. Is it a base breakout with consolidation? Yes, it is, right? Breakout, boom! There's a base here, BBWC. This can make you a lot of money, people. A lot of money. Anyway, let's put the gap in. So the gap goes to here. What day is it? 5/6. Gap goes here, starts down here. Boom. We tried it already. See that? We tried it and we got half gap. So that's the open. We got half gap. So because the gap closes, or the gap actually opens here, but we got half gap, we're going to put this gap to half gap because this already occurred. So this will probably go all the way up, get all the shorts, go a little higher, and then the longs will be in pain. So this kind of structure right here can actually get you, if you just focused on 30-minute, you don't have time for all this other garbage, this can give you a lot of opportunity right here, just thinking about it from this perspective. But seeing it from the higher time frame perspectives is extreme. I can't underscore it enough. Um, it's extremely useful for understanding the bigger picture. And the more you do it, just like anything you do in life that you repeatedly do, the more you become comfortable with remembering everything. And then you can focus on some of these more intricate day trade things like the footprint, and have the higher time frame stuff almost floating around your mind, right? You're going like, oh, I remember this. I know what this node is from. I know what the bigger structure. Oh, cool. Here we are moving in 5-minute candles, 1-minute candles, 1,000 volume candles, and we're moving into these zones. Oh, I'm noticing icebergs into this area. Interesting. And we're not really into a breakout zone. They're just icing it up here. Huh. Maybe they are positioning into the FOMO. And on a low time frame, you don't even notice the FOMO yet. They're just easing into their positions. Much bigger players, right? So these bigger time frame things that you're looking at on the weekly and daily, and then the 30-minute, they can be incredibly illuminating for you day traders that are left maybe going, I see ice, maybe I should be going short immediately, right? Well, when you see these patterns repeating and we don't have any breakout structure on the day trade time frame, you should be going and looking at your higher time frame going, oh, I remember I did the homework on that, right? I remember what TYP said about this. We're into an old gap. Huh. Interesting. They're selling here. And it doesn't seem like there's really anything intraday that should cause them to be selling. Higher time frame, folks. OTFs. OTFs in the house. That's why on Twitter sometimes I'll say, OTF spotted, right? It's because I know about the higher time frame, right? I work hard on the weekends to prep myself. I'm not even going to get to the NASDAQ today, guys, because all this talking slows me down so freaking much. Roasted like a rotisserie chicken on a treadmill. Yeah. Oh, I think my family's going somewhere. What time is it? 2:45. I've been doing this for a little bit. Oh, hold on. Got to check my messages. My wife is texting. Going to visit my dad for a bit. Cool. Well, maybe I'll head over there after I'm done here, because I'm about ready to get out of the house here. It's nice and cool in the office, but I get tired of trading stuff too, so. All right. So we got the gap here. We have a gap, little one here filled. We have a big old gap here. Oh yeah. So we gotta look at this, definitely. All right, let's get this one in. Yeah, this whole area. There's settlement, by the way, the purple line. So that's gonna be big old resistance right there. But if you know me, if we come all the way back up through all this LVN, right? This area here, and we get all the way to back here, why not go get the stops? Why not? You got to find liquidity. You got to find the FOMO. So, it's interesting that I'm something to note. I'll gap it from all the way up here to down here. But on first touch of area, I'd be looking for something like, so this is the dev. The weekly developing POC is this white line. So at some point early in the week, POC was started here. Here, we'll just do this. Moved down, moved up, went sideways, and then it moved up. And then by the time we ripped to the downside, okay, So DevPoc is here. Notice that for the gap's here and then here. So DevPoc is exactly half gap. Also happens to be the naked volume point of control from this day, right? So this day here, 517. And we have that marked here. So 517 naked volume point of control and naked time point of control happens to be half gap, 50% of the gap, right? But, you know, intraday, when people have the gap here, they're going to say, "Oh, it half gapped." They won't know why. They don't know why half gaps work, but you guys kind of will have an idea, right? Is there's huge volume here, right? But it's kind of memeish in that, you know, it's like a 50% level. That's a fib. Does it work because it's halfway? Well, it probably does because visually. But does it also work because everybody's using it? Right? It's like self-fulfilling prophecy kind of thing. All of the above. All right. Kind of cool. All right. Clear that, clear that. All right, so we got a gap. And the gap is from, it occurred on 518. So let's go mark it up, take our time. 518 gap. Now, why is it important to mentally go over this? Naked time point of control, naked volume point of control, talking about half gap, because my notes, I'm just going to have, as I'm looking at a short time frame chart intraday, right? Let's go to the ES 5-minute candles, right? Now all this stuff is now overlaid, right? I'm just going to have a chart like this, and price is going to be moving, and I'm going to see a white zone here. And then I'm going to go to the top of this and go, okay, where's the end? Where it just says gap. And then I'm going to see this, and in a week or 2 or 3 or 4 days, when I've maybe had a frenetic trading day and maybe we're getting there end of the day or something like that, and I'm mentally exhausted and I've been streaming on YouTube and I've had a million questions thrown at me and I'm answering emails and blah, 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 blah. And my baby's screaming because she's tired and we're halfway there. Am I going to remember half gap? Yes, because I'm talking about it. I'm thinking about it. So, memory hooks, right? You want to talk about and think about all these things enough to where when we get up to 517, NVPOC and NTPOC, now, could I put on here and half gap from 518? Yeah, I could. But guess what? On a footprint chart, this is going to go over my volume profile for ETH and RTH, and it's going to be too far. It's going to be too wide, and it's going to be on the volume chart, which is only like starts here and goes here. These things get too long. The notes get too long. So I'd rather talk about it for a while or think about it for a while and do this repeatedly on weekends and then be really, really prepped for the upcoming week. Anyway, my friend Timmy says, Mike, you put all this work in. You should just charge people for this whole trade plan. Put everything on a chart and be done with it. And he's like, I'll be the admin for it. I'm like, dude, you know how much time and headache that'll be? No, I ain't doing that. But what I will do is I'll share this process with you guys quite a few times until you get it, for the purpose of educating you guys. And I hope some of you guys come away going, oh, you know, I think I'm figuring out how to get these levels. I'll hit Mike up on Twitter or email or something like that. Maybe share my charts. Maybe we'll become buddies, and then we'll trade together for years. Maybe. And we'll all make bucket loads of money doing it. So that's about my best hope for this, guys. It's not to share all this so that you just put blindly. How many people are going to understand what these levels mean unless they watch this video? Honestly, not very many people. Now that I'm thinking about it, maybe I should make this a private video and then charge people, and you can watch 3 or 4 hours. Because is my time valuable? Sure, but again, Feynman method. So I don't know. I'm a contrarian ball. For now, I'm really happy just sharing all of this stuff with you guys, and I hope you find it useful. If you do find it useful, just like the video. It's good enough for me. I appreciate it. Cool chirp tone. Glad to hear it, my friend. I'm glad you're understanding, or it makes enough sense. Because sometimes I think to myself, I wonder what it sounds like, but I don't go back and watch my own videos, so I don't know. Anyway, so on the 5-minute, marking these notes up will make a difference. So you see, like, this chart here had this zone here as potential resistance intraday, right? But then you're also dealing with this higher low scenario. And then you're dealing with the options that Andre Dennis so poignantly pointed out. Right? You're going to have likely options flow, but interesting. So anyway, I'm going to get rid of that. Clean it up. Anything that doesn't have a really clear mark, go clean it up from your day trading garbage. Clean it all up, because the last thing I want for myself is to have all this kind of garbage, right? Clean it up. Keep all your high time frame stuff up here. Clean it up. All right. That's the fib, right? I think that's a fib level. I think. Let's see. Chart drawing properties, horizontal line properties. Where does that go? What's the anchor from? 513. Let's go take a look here. Really important to find these things. Oh, did I already lose it? Let's see, 513. Might have lost it already. Let's see. Oh. Yeah. Maybe I do need to eat, guys. Maybe I just need to eat and stop. Alright, let's find it. Weekly fib, that's way too high. Okay. Way too low. Should have something emanating here from 513. There it is. Here it comes. What the heck? Discipline says this helps. Even though I hold trades anywhere from 5 seconds to a minute. Hey, that happens to me too, Disciplined. Yeah, you guys see my live stream. Sometimes I'm in and I'm out. I do trade the open. I've had people thinking I don't trade the open in comments lately. I think it's because I'm not trading during the open. The open moves a lot faster. The data comes in much faster. So for the way that I trade, which is trying to take a lot of information and sort of parsing it to figure out who's trapped and where, I can't keep up on a live stream and trade well. So when the open's moving and it all moves really fast and there's a lot more volume, it's kind of like the close in a way. Sometimes during the close I just need to shut up and trade and not talk about it, because it's just happening too fast. The movements are too vicious. So RTH Open is same thing for me. And so I've long ago learned that if I trade the open and I'm chatting with somebody, that I'm a worse trader. So that lull around noon Eastern all the way to the close, it moves slow enough during that time that I can explain things during a live stream. Otherwise, it's just, you guys would just be watching me, right? And getting signals, and it would be not what I want, which is, I want to talk things through. So, plus, believe it or not, I enjoy peace and quiet while I trade most of the time. Which is why I will go through some stages where I'll be on live streaming, and then I might go a week or two and you won't hear from me, because I need that quiet time to trade well. So anyway, and I enjoy it. I enjoy it a lot. So let's go up here. Back. 513. Yeah, where does that? I thought the insertion point was 513. Let's see. Chart drawing anchors. 513. 4,275. 513. Shouldn't it be here? Well, maybe that's just a horizontal line, is what that is. Is that all that is? That's probably why. Yep, horizontal line. Dum dum. All right. Well, guess what? We'll get rid of it. Let's see. Let's see what this one is. Horizontal line properties, anchor. Open's not that hard to trade. You have to know what to look for. I mean, it's hard to trade in that it moves fast, so you have to process more information fast. So yeah, but there's just scenarios. Maybe one of these days I'll go over open scenario. There's so many scenarios at the open, but mainly, right? There's. So I'm like, well, maybe one of these days I will, and here I am. I'm gonna talk about it. So at the open, you have gap and go. So gap, half back, retest, go. Gap, fill gap, go. You have gap failures. Fill the gap, keep moving down. Likely inside day or trend reversal day. Boy, this is going to get long. And these things already... do I really have time to talk about each one? No, I don't. But most of them are self-descriptive, right? So, but if you know what to measure or what to look for in each one of those, then they become simpler. You have gap and go. Gap, attempt to sell. A bunch of buyers make headway quickly and keep going. All right, trend day, gap and go. So now we have 4 of them. Let's see. Yeah, I'm not going to go over it. I mean, I kind of want to, but most of this is would be better off with visuals. So maybe I'll do individual videos about the various types of openings. And then, of course, because I like market profile, there's tracking of Japan and where volume is accumulated. tracking of the Nikkei and figuring out where they are likely buying our market to hedge from theirs and where they liquidate, comparing Europe to Japan or Asia and where they sold the market and what our European market's doing. So where they net long and net short from. How much volume does each one have? And then based on sentiment and direction of the US market, where are European traders trapped? Do we hold from the European highs or lows, etc.? So anyway, and you can look at, again, this TPO here is not showing ETH right now, but if you do, you'll see I have them all broken out like this, so you can see the body of movement from each of those, and then how we find support and resistance on each one of those time frames. So if you wanted to pay somebody to teach you about that, you might be able to join Damon Pavlatos's. I think he's got a trading group. He is the husband of LBR, Linda B. Rashke, famous futures trader. And so her husband is a market profilist, likes the TPO stuff, and he separates out the sessions into US, Asia, and European sessions, and he has a lot of theory around that. So he uses his own software. I think it's called Photon Trader, and I've heard good things. He's been doing it a long time, so would probably go to somebody like him. I have my own methods. He probably has very refined methods because he charges people to teach them and to share his methods. So his are probably a lot more refined than my, hey, this is what works for me kind of stuff, where I haven't put it into really an organized, shareable method or something like that. So anyway, that will determine the strength of the markets as well. And you'll see that the European, right, and Japan have very distinct characteristics in their movement. Right? And you could just put lines on your candlestick charts and see, right, that, you know, there. Right? You can see that right here at the European, volume picks up, right? Goes from, 1400 right up to essentially double volume right at the European Open, right? And you can see that the going into that session, they were selling it down on volume here as well, right? 2000 right in this area, right? And then, all right, you can see it just gets nasty. It gets nasty in this year. I don't trade very often beyond 1 a.m. my time, which is right around this area. But I will trade the first 20 or 30 minutes if I'm up late in this area, right? And you can often get a really good idea about how these things are going to move and who's buying what from what part of the world. So it's kind of, these things are interesting, but it's a little too involved to even go over in a short little yes analysis video. But again, you can see volume pick up right here, right at Japan. But oh, these things are so interesting to look at. I love I love breaking all this stuff apart. It's so interesting. But anyway, I also love thinking. So this will make you think really hard. And for some people, it's just too much. I get it. Huh. Anyway, I don't know. I think we're done with the E-mini. I think I'm going to go prepare some food. Hope you guys enjoyed this. If you did, hit the like, smash that like button, smash the subscribe button. I know these are a lot less exciting for a lot of you guys than live trading, but you know, this is where the trading gods are made, is on the weekends. If you guys want to be great traders, this is the time that you spend a bunch of time getting your elbows dirty, getting in the trenches, and you know, going over it and learning about how to prepare for the markets for the upcoming week. I mean, believe it or not, there's a whole lot more that I have left to do. So I chart the S&P top 25 on Thinkorswim every week. Individual names by market cap. I do the same thing for the NASDAQ. And if I'm going fast and it's easy, sometimes I'll do the S&P 100 and the NASDAQ 100. And I'll put lines and I'll set alerts on all of it. And because the indexes represent the underlyings, those individual stocks, I have an even greater understanding of where the indexes might go during the week, as I'm getting alerts from individual names saying, oh, this level has broke. So I know that either I'm going to get a reversal if it's a large cap stock, or I'm going to get a breakthrough. And if the indexes are at a really key spot, and it looks like the indexes are going to unleash the beast and break down, I'll know, oh, Apple just broke a level too, because I just got that alert. So you see, like, it's not just all of this. And you're like, well, now I'm really damn overwhelmed. Now you really done it. Well, again, see pinned tweet on Twitter, right? Pinned tweet on Twitter. Yeah, that's redundant. You know, you add a little bit, right? You want to build a cool fort? You want to build a cool house that has everything you want? What do? You don't amass all your little valuables in an afternoon. You travel to this part of the world and you get a souvenir. Boom, you put it in the room. Same thing with trading. You add a little bit here, a little bit there, right? I'm just putting a fire hose on you guys and go, this is everything I do, right? Pick one thing. Pick two things. You like HVNs? Put HVNs on there, right? You like naked volume pointed controls? Put those on. You like trend lines only? Fine. You like horizontal support and resistance? Put them on your charts. Have a few lines there. You like balance area? Great. You like flags, right? You like channels? Well, only put them on and pay attention to them and see how the market moves just around your channel. If you find that your channel is not giving you a great signal, well, then you might be missing some clues. So add another thing. But learn it, and then add another thing, and then that second or third thing that you add, see if that then gives you a nice signal. Oh, still not good enough, right? Oh, you're only winning 60% of the time on your day trades, or your swing trades off those levels that happen to be swing intraday trades because you like to buy once and sell once during the day. All right, well then add something else. Add a TPO, right? Start keeping track of singles. Start keeping track of T+1, T+2 settlement, right? I don't even talk about settlement in these videos because these are big levels. But settlements, those are important for liquidations too. So, you know, as you have different things on the chart and you get used to having them on your chart in front of your eyes during the day, you're going to start to be aware. Oh, we're about to pass a settlement. Oh, you know what? And I have an HVN there. And I have a gap. And I have a daily trend line. And I have high time, low volume marked on the chart. Huh. Well, this is cool. Maybe, and we've gone there twice before on prior day swing highs, and we've just shallowly pulled back. Maybe when we go to that next time, we're going to punch through. Because what? Liquidations from the short side above. Boom! Now you have an idea, right? But, add one thing and another thing and another thing. And before you know it, you can call yourself a trading surgeon, right? Not just an emergency, I don't know, Band-Aid applier, right? Like your job in the emergency is just to put Band-Aids on. Don't call yourself a surgeon if you don't have the complexity to your trading. But if you do have complexity to your trading, and you can look at various scenarios and come up with a good game plan based on a lot of moving parts, well, now you're turning into an expert, a surgeon, if you will, of the markets. But a lot of people, they just want to kiss. Keep it simple, stupid. And guess what? Your results, unless what you use is really, really good and not used by many, your results are going to be, keep it simple, stupid. Probably the last part of that, stupid. They're not going to be great. So, I am arguing for complexity unless what you have is some cipher that works repeatedly. But the universe is complex. It is. The way molecules interact in your body is complex. Is health fairly simple? Yeah, it is. Right? Get sleep, eat healthy, don't think happy thoughts, don't be stressed out all the time. That's simple, but if some of that starts to go wrong and then you get all this, I don't know, you have an autoimmune disease or, right? You have problems in your body, you may need to go to an expert. And it won't be simple. You may need some medication. For some people, it's simple. Everything works. You got lucky. You had good genes, right? Your genetics are great. But for a lot of people, for trading, they stumble onto the wrong thing at the beginning, and it doesn't work for them. And they keep trying and trying and trying and keeping it simple, and it never works. And for some, the combination of things that they use works right from the outset. So what I'm advocating is keep trying combinations, and I'm trying to give you different tools so that you can try various combinations. So anyway, end rant. Have a good weekend. Ciao.